And can you guys see my screen right now? Can you guys see Thinkorswim?
Yeah, you can see it.
Okay, perfect. All right. Um, okay, so in the past few days when I've been doing the lives, I've been talking about this possible loop, and it actually happened, right? I was actually talking about it here, right, on this day, and then yeah, yesterday. And right now we are, I think we're trading right now. Let me see. Um, Let me look at my phone. Right now we are at 40.70. So yesterday I was thinking, maybe the candle is it was going to be somewhere in here and eventually touch this 50 moving average that I was talking about yesterday. I'm going to do the reaction. It's a strategy that I created. And I use it a lot when I have stocks actually hovering over the 50, like so close to it. So I thought we were gonna have a candle here and then it was gonna come and touch it in there. However, pre-market, it's already here. It's at 40.70. It's actually a little bit below the 50 moving average. So the loop has happened, okay, already before actually market even opens. So what does this means? Okay, here we have two loops. This moving at sorry this Bollinger Band, the middle is a very powerful resistance, just like the 50 moving average. Whenever you're underneath it, it's hard to cross it, right? Depending on what's going on, then it crosses it and it pushes up. So then here you see it's a loop, another loop goes down, right? And then it goes all the way down to like take a breath and now push all the way through, and that's what happens. That's how kind of these things kind of work. The same thing happened over here, right? You did a loop and then it just goes all the way down. This is something I actually drew. So it goes down here and crosses it over. So I when I saw this right here that we on this day, so I'm like, it looks like it can't pass it, so most likely the loop is going to come to play. So we are already, some of us are already in stocks that are already like down so much, right? So it can, I mean, it could keep going down, right? Nobody says that it can't, but it's already so oversold. All right. But the thing is right now, as you see, before it came to the 50 and it reacted, it went up. Right now it is at the 50, right? It is right here at this line, and market hasn't opened. It could be that we may have a good good bulls running this and actually pushes the price up and then bounces back. It could happen, right? However, it could be that it just keeps dropping, right? And it just keeps coming down. So what happens at that point? Let's say I don't know, let's talk about Neo. Okay, that's a stock that many of you know, right? So this is the Excel sheet that I created. Okay, so if we're gonna go ahead and talk about Neo at this point, Neo, it has first of all, right, it has come on a downfall, right? And then second, here, Neo, let me remove all this. Neo has crossed, okay, right now it has actually broken a support that it had here. And right now, what happens with supports when you cross underneath it? If you cross it, now this becomes a huge resistance. Okay. So at this point, let's say you bought Neo yesterday. Okay. And that's where I want to come from. So yesterday, what I did a strategy, and I'm not going to go into the details of it. I did like back ratios on everything. So, anyways, that strategy, technically what it says is that it needs to, if it actually falls all the way through, I didn't pay nothing. Maybe if I lost, maybe it was $20. But if it goes, if it rebounds, right, so hard, right, it goes to 37, it goes to 38, I make a lot of money. So the only thing that Neo can't do is be trading sideways. Okay. So as of right now, my back ratio was at 34.50. So anything below that, it's like I never pay nothing, right? Now, what happens if yesterday I actually bought 100 shares of Neo? Oh, I see that Neo is at, it's low at a low point. However, if I didn't know technical analysis that this will be actually a resistance, someone could have bought yesterday Neo 100 shares. So for you to buy Neo 100 shares, yesterday I think it was at 34.19, right? Let's say that person bought Neo. Let me just go ahead so you guys can see it. So that person bought Neo at $34.19, right? That's what it says here that it closed yesterday. And let's say you're trying to buy 100 shares, right? So technically, you have to spend $34, to be the owner of those shares, right? This is when you buy shares. So let's say that you are expecting Neo to go all the way to 37 or maybe 36 or whatever it may be, right? Let's just not be so greedy. Let's say that you think that Neo is going to go to $36. So you're like, well, I'm going to make $181. I'm fine with that, right? So technically, what happens is that if you had, okay, this is a lot, but I'm gonna go ahead and make it smaller. Okay, you probably had the $100,000, the capital, or portfolio, whatever maybe. But let's go ahead and make it smaller because of the amount that we are doing. We're not buying 1,000 shares or whatever. So in this case, you have $5,000. That's your portfolio. All right. So what happens is that you spent $3,419 to buy 100 shares of Neo to make only $181 whenever that happens. So what happens is that you have left, okay, $3,419 deducted from 5,000. All you have left now to play with or to invest in something else is $1,581. That's all you have left, right? So at this point, okay, at this point, that's it. You bought the shares. So what happens? I'm not going to go to the negative side of it. Okay. I'm not going to say that Neo right now is, or actually I should. So at this point, Neo is trading pre-market $33.02. That's how much it is right now pre-market. So how much you actually lost? You lost, right? So you have this right here. So right now it's going to be $34 equals it will be equals whatever I have here. Hold on. This minus this. That will be it. Hold on. No. Just give me 1 second. Okay. So this minus this times this. I think that will be the formula. Actually, just give me a second. So it will be 3303 right now. Okay. So at this point, and I can't even think right now, but that's, so let me go ahead and from here to here. So you lost $1 from it. So technically you have lost $116 from it. Okay. So you're red right now. Okay. You guys get that, right? So, so technically Neo went down. Now you lost $116. You lost like almost $1 per share, something along those lines, a little bit over that. So now you're at negative $116. Cool, that's fine. So now that we're gonna go ahead and take a look at what would it be if you actually would have bought Neo. Okay, let's say Neo for 2 weeks. Okay, the longer you buy share options, right now I'm going to go into options. Let's say the longer that you have the expiration date expiring your contracts, the more expensive they are. So let's say you happen to buy, okay, let's say you happen to buy options at this point, okay, and let's say you want to buy it for June 4th, okay, you want to give yourself 16 days to see if it actually, the stock price goes up, okay? So at this point, you're like, okay, you know what? I'm going to buy a call. Okay, I'm gonna buy a call because I think NEO is gonna go up yesterday, right? So you would have bought a call. Many of you just know about buying calls or buying puts, right? But there is more than that. There is a bunch of other ways that you can actually reduce this premium that you pay, because this is what you pay. This is called options, and what you do is that you pay a premium to someone, okay, to the seller, and at that point you have 100 shares that if those shares go up you make money. However, you already paid for this premium in advance. Okay, so that's $229 that you're paying to someone for them to let you borrow or to give you those 100 shares momentarily until it goes up. If it does go up, great, you make money. But if it goes down, then the most you will lose is $229. Okay, so at this point, okay, sorry. So at this point right here, let me put this back. So I'm going back here. So at this point, yesterday, let's say you actually bought the 200, I think I said $229, right? Let's say you bought that call because you think that NEO is actually going to go up, okay? And it could go up to $40, to 50, to 100. You make money. So cool, right? So technically, okay, technically right here, what happens with options, okay? With options, this is how much you actually spent. $229 to actually have 100 shares. Okay. So let me see this right here. Why is this going? Just give me 1 second. J6, okay, 229. What's going on right now? Just give me 1 second. Um, okay, something is happening here, but anyways, this is, do not pay attention to this right now. So anyways, so technically you paid, okay, $229 to actually have those shares with you. Okay, so at this point, if the stock price goes up, you make money. All right, if the stock price goes down, the most you lost was $229. So what happens with this is that you still, okay, out of the $5,000 capital, okay, and now you minus $229, you actually, you still have left from your capital is $4,771. Okay, so what's the difference is that NEO, in a day, from yesterday to today, it dropped almost $1 already. It's over, it's done. You already lost that dollar. Yes, you keep the shares, but you already lost $116. However, with options, if it actually does go down, okay, such as what we just talked about, and just give me a second. Why? Okay, so here we go. So today is actually today we're May 19th, right? So with May 19th, if actually in this case you bought it yesterday, okay, this is from yesterday, by the way, because it updates today at 9:30. So you bought it yesterday, and then let's say today it went up to $33. At that point, you're actually negative. You're right now, you will be negative $4, because with options it doesn't mean that if it goes down you already lost the full money. No, you don't. You actually, it still has value. The only way that you actually lose that money is if it's June 4th and it actually, it's it's less than your price, than your strike price, which in this case, let me go ahead, and in this case is $33.50. Okay, so if actually by June 4th the stock price is still at $33.50, okay, at that point, anything $33.50 and below, that's when you actually lose the $229. If let's say by tomorrow, okay, the stock price is still not going up, it's still going down, and let's say that tomorrow now the stock price is at $32, from the options you only lost $50. However, if you actually had shares, okay, so $2 okay, $2 down from wherever you bought it at, right? This is going to be almost, let's say it's at 32, you're going to be at a loss of $219 with shares automatically. However, with options, if it goes down, all it goes down to, okay, here at 32, you look at the purple line. That's what I'm looking at. The green line is for whenever you already is at expiration date. So here, the purple line is the one that you look at for 50. At that point, you will lose only $51 for your options. So what am I telling you? That you actually lose less with options than you buy in shares. First of all, it hurts your capital because you had to spend $3,419 to buy it. And then all you have left for you to invest somewhere else is $1,581. However, with options, okay, is $229 what you're going to invest in order to actually in order to have to manage those shares. And if actually the stock price does go to $36 with options, let's say that everything went good and actually it does go to $36 and you're out at $36, if you let it, if let's say in this case, if let's say to today it went to $36, you made profit $173 because I'm looking at the purple line. If today went to $36, you made $173. However, if you let it expire, okay, because this is a high premium that you're paying. Remember, you're paying $2.29 per share to rent it because technically you're renting those shares. It's like imagine you buy a car, not you buy a car, but you lease the car, right? You ride it, right? And then you return it. But that money that you pay monthly is never going to be ever yours. You pay it and it's given away. However, when you buy a car, you spend more money, right? You have to buy the full car, $17,000 or whatever it may be, and the benefit is that you ride the car just as when you lease the car, right? You're also riding that. That's the benefit, or not the benefit, the goal of having a car, whether you lease it or you buy it. However, when you sell the car or you give it away, technically you are going to get some money back, because you're selling it and it was yours. So with options, whenever it doesn't go your way, the most you're going to lose is $229 versus with shares, again, as of right now, just buying Neo yesterday, right? At that point, you're already I don't know why did I do this. Sorry. Okay, so 33 was today. So you're already at a loss of $119 if in a day. However, with options, you are at a loss of like 34 or $50 difference. Now the profits, okay, when you buy this type of options, as you see, it's high that you're paying for to rent those shares, as I was saying yesterday, right? It's $2.29. So technically, if let's say that by expiration date Neo is only trading at $36, you actually all you made was the green line. If you look over here is the green line, so it's actually $22 that you made. And the reason why is because, first of all, you paid a high premium. However, there are other ways on how to finance a cheaper premium. So there is something called the bull call spread, and all these are spreads that you actually buy a share, buy a call, and then you sell a call as well. So at that point, you see the premium that it went from $229 to $110. And at that point, now you have now your premium is going to be way cheaper. Okay, now your premium is going to be way cheaper, and you are expecting to be a Neo only until $36. And now, because you did that type of a strategy, again, knowing options is a whole different world. You save money, all right? And in these situations of uncertainty, which is in this case, the SPX, all right? Right now, we don't know what's going to happen with the SPX, if it's going to continue to tank, okay? And if you actually bought yesterday a bunch of shares, you're going to be big red negative. So I was actually doing a calculation yesterday for Genus, okay? Just give me 1 second. Let me see why is this actually not working. So just give me a second. It's E6 minus B6 and then minus J6. What is J6? Um, I don't know what. Anyways, I will have to think it through. But anyways, so let's go ahead and talk about Genus. Just give me a second. So Genus, let's say yesterday you bought 20,000 shares of Genus. Okay, so at this point, some people they do have it, some people they have even more than this. Okay, so technically for you to actually buy Genus in this case, you actually you actually in this case you have to spend $31,400 if you wanted to buy 20,000 shares of Genus. And that's what most of us right now are actually holding. It's like 18,000 shares, 10,000 shares, 50,000 shares. So they kind of right now that's what they have, even though they're at the higher average, just like me, right? So anyways, so at this point you're expecting Genus to go all the way to $2.30. I mean, that's something that it could happen with Genus because there is a gap in between this right here. So I can at least think that it may go there. I can really see it happen. And right now, actually, Genus is trading at $1.49. So anyways, if you think that you're going to be with Genus all the way to $2.30, for example, right? So at that point, okay, at this point, let's say Genus right now it's at $1.49. So right now you lost $1,600 between yesterday and today. And with Genus, you had to spend, let's say that you actually don't hold any shares and you just bought it because you thought it was cheaper. It was cheaper yesterday. So it's $31,400 that you had to invest. At this point, you're looking, okay, because you think it's going to go to $2.30. At this point, you think that, hey, I could make all the way up to $14,600 with Genus as a profit, right? Or recuperate my money if I break even and I just leave, right? So at that point, you're hoping to make this profits. However, over here, okay, Genus from yesterday to today in 1 day, you just dropped $1,600. We all did, depending on how many shares we got, obviously. So this is just exaggerating, but not, I mean, in this group, we have many people that they have so many shares that is incredible. So anyways, so at this point, okay, at this point you are technically you need to have $31,400. You just lost $1,600. So from your capital right here, okay, and then you have your technically what you have left from $40,000. All you have left to actually be able to buy something else is only $8,600 from a $40,000 capital, right? So now, if we actually looked at Genus, okay, if we actually looked at Genus yesterday, okay, on the shares, yesterday it was at 22 cents. Right now it's dropping, and I think it's because of the time, but or maybe okay, so right now it's dropping. Okay, so let's say it's 18 cents that you happen to buy. Let's say that you buy it right now, right? Today is at 18 cents, and you buy today. You decide to, hey, you know what? I'm gonna drop all my shares. I'm out of, dropping all these shares right now. I'm just gonna go ahead and buy. I'm just going to go ahead and buy options for June 4th. If Genus is going to do something, it's going to be doing it within a week. Usually Genus charts, okay? And this is another thing you have to look at, right? Usually Genus, it gets kind of volatile, right? Or maybe you need more time. Maybe you need like at least 4 weeks. So you come over here and you go to a month, or let's say even 30. So by June 25th, Genus either is going to go up or is going to go down, one or the two. And here's the 22 cents that I was talking about. So at this point, you got 22 cents, okay? So so you actually spent 21 cents in the options. All right. So this means that you actually spent for to manage 20,000 shares. You actually spent $4,400. Okay, but you're like, damn, I'm gonna have to spend $4,400. What if it doesn't go that way? I'm gonna lose $4,400 for sure. Okay, that's fine, it's understandable, right? So then right here, technically you're saying that Genus is going to go to 51 cents, okay, because 157 to 230, or however this was added, okay, so technically it will be 51 cents because it's accounting the premium that you paid. So anyways, so technically you have 51 cents of profit. So here you're expecting Genus to make a profit of $10,200. Okay. However, when you do shares, you're expecting Genus to actually give you $14,600. So right here, you're like, well, but how much do you have to spend? You have to spend $31,400. While this one, all you have to spend $4,400. All right. So if you had a capital of $40,000, if you bought the shares, you had $8,600 left. But if you actually bought the options, you still have $35,600 left that you could invest somewhere else. So at this point, within a day, you already lost $1,600 if you would have bought shares yesterday. Okay. However, with these options, if you actually, if in this case, let's go ahead and take a look at it. Okay. I'm going to go ahead and analyze it. All right. If you actually not lost, but if you actually, let's say, call and it goes down, why is this something is wrong with Genus chart because this is not the right graph for it. Yeah, this is not the right graph. It didn't look like the other one, like when I did it for Neo, such as the graph should be looking like this. Just to show you real quick, the graph should be looking something, not necessarily this, but it should be looking like this. You see that it has a line. This line represents the most that you could lose. And this line represents, as it's going up, the most you could win, right? The most you can profit off of it. So what I'm trying to tell you is that when you use options, you use less money. You have more money that you can use it for other stocks, for anything else. Okay. The difference between buying shares and buying options, the plus about shares is the fact that if that stock is actually getting dividends, you get dividends out of it. With options, you don't. All right. The other benefit that I see with shares is also the fact that you could back hold it for years and years and years to come. Okay. And let's say Genus actually, if Genus actually, it went like in a straight line. Let's say it started trading for $1.50 forever and ever and ever, right? Or 157. Let's say this is you bought it yesterday, right? And let's say Genus never changed its value. Then at that point, you never lost anything because if you bought it yesterday, and also, but options you would have lost because at the point, it didn't go up. It also didn't go down either, right? But do you think that Genus is going to do this? No. Genus is volatile. So it goes up, it goes down, it goes up, it goes down, it goes up, it goes down, right? So at this point, if you actually go up with shares, you make money. If with shares you go down, you lose money. But you actually think, in my opinion, you lose way more with you buying shares than you buying options, because options actually, all you're going to get rid of is the premium you pay, but the rest of the money, you still have it with you. If Genus goes to $1, you lost $11,400. If Genus goes to $1 on this option, all you lost was $4,400. If Genus goes to $1.20, you lost $7,400. With options, you still lost $4,400. Okay. Now, what if Genus actually goes to $10? Okay. If Genus goes to $10 with your shares, you profit your profit will be $168,000 600. However, with options, you will get 164,200 dollars. So this is almost the same. The only difference that you're taking away from this one to be this one is just the premium that you paid in advance. But everything else, all the profits left is yours. So don't think that buying options you get less money. You actually you get more for the investment that you did. So you get on this one $164,000, $164,000, okay, and all you invest was $4,400. On this one, you get $168,000, but this one you actually you had to invest $31,000. So that is the difference. So as of right now, okay, again, yesterday I what I did, I took out all my shares except Genus, and then I just bought different type of strategies and options like back ratios. I did buy some bull called spreads, but the reason why, because I wanted to pay a cheap premium. When you combine strategies, you actually pay a cheaper premium. So this is something called bull called spread, and instead of you paying $320, all you pay was 89 cents or $89, because it's 89 cents times 100. That's how much you pay. So I was like, okay, if it goes up, great. Okay, and that was something I did with FSR. Okay, and all I paid was, I think, $65, in case that it actually does go up because of all those news. But good thing that actually I did that, because all I lost was not lost, because I haven't even lost. That's the cool thing about it, that I have not lost. All I probably was like $10 out of it today. But um if I would have held my position yesterday of so many shares, right? I would have right now, let's say yesterday was trading at $12.30 type of thing, right? And let's say I had 200 shares. So technically, why is this not changing? Okay, and then at this point, okay, let's say I was hoping that it goes to $13, okay, for yesterday. I would have actually made $140, okay. However, today the shares are trading at 11 and 83 cents right now. So technically I was hoping for $140, but I lost actually $94. But but what I bought yesterday, I think it was 61 cents per, or 45 cents, one of the two. I don't know. Let's go ahead and say 61 cents. I actually bought the options for, okay, saying that it was going to go up to a certain price. I think it was $15. So anyways, so right here, technically, if as of today, sorry, yesterday I actually spent $122 versus 2,460. And if it actually doesn't go up and it goes down, yes, I will lose $122, but for in you don't lose that in a day. As they let's see over here. So I don't even know. I think FSR also, something is wrong with this right here. You see my bull call spread right here. This is what I was telling you about. So this is my position from yesterday, and I said it was going to go to 14. Okay, so I bought this yesterday, right? So at this point, why is this? Let me take all this out. Okay, so technically I bought it yesterday, right? So right now, I should be looking at the purple line, not the green line, okay? Because that's at expiration. So from yesterday, right now, I'm at a loss of, right now it's at 11.80. So right now I'm at a loss of $9.48. However, if I actually bought shares, I would have been down $94 compared to $9. So that's the big difference with options. So right now I feel that everything I have right now is nothing but options. But again, Options, the reason why I'm doing that, options, if you don't know how to use it, as far as you have no clue about charts, a technical analysis at all, you could be buying it all over the place. And at that point, it messes it up everything, right? You're losing it instead of making money. But anyways, do you guys have any questions at this point? Anybody has any questions? Anything that you guys want to add on this? As of right now, FSR. So FSR right now, it is actually what, 1149. Okay, so 1149 technically, I would have lost. I think I still have probably 100 shares, just 100 shares, but I had almost 1,000. So I kind of saved myself a lot on all of that. I would have been like $1,000 negative. So right here, I would have lost $162, right? But in this case, and right now it's just going back and forth. So let's see what happens. But anyways, that's all I wanted to share with you guys. And the reason why I wanted to do this is because of this guy right here, the SPX. So I feel that I'm gonna be checking on the SPX to see how low it gets, and as soon as I see a bullish divergence, I'm gonna get into trades. So right now, I know some of you have taken my the technical analysis with me. So that's what my plan is to get in once I see bullish divergence into it before I actually get into it, if there's any bullish divergence. But right now, what's gonna happen, in my opinion, with the SPX right now is fighting, completely fighting. Is trying to stay above the 50 moving average. So if it can't do that, that's where we're going to start seeing like a huge drop and eventually see a bullish divergence. And that's where I'm going to try to see if I can get into place. Otherwise, I'm going to hold myself away from all this because I don't want to, I don't want to be risking my money into the market. And if I'm going to buy anything, it's going to be just, options, not anything about shares or anything like that. Let me see. Yeah, right now, yeah, they're trying to hold it here on this 50, on the 50 moving average. So let's see. Something similar happened here. So it actually, if we can actually hold it above that line, it should be okay. But if not, then that's not going to be looking good at all. And there has been like very like bearish divergence. In this case, you could see it here. There is a bearish divergence that was announcing from here to here. It was announcing the drop, so it did. Also, guys, I don't know if you guys knew about it, but we have a website. Go check it out and let me know also what you guys think about the website. I definitely want your feedback, and I'm going to be changing it little by little. So we got ODI Trading website now, and mainly is for how we offer the courses. Also, I got here for people to join us at the Discord and check it out. Let me know, things that I can improve. That will definitely help out. And I'm just trying to see this right here. This definitely is a key. I don't want to be bearish on this, but I feel like we might be seeing something, something along these lines. We might be. So everything depends on today, how much we can stay. So it looks like they're trying to come, you see? So they're trying to bring it back up here to this line. If we can do that, that will be amazing. So right now I'm going to have to keep a close eye on this one right here. All right, guys. Anything that you guys want to say? What you guys think about options now that it did this clarify anything that you guys maybe didn't know about? I know some of you guys are big on in options. Okay, so they're trying to bring it up.
Is this video going to be posted anywhere? Because I honestly missed more than half of it. I'm over here at work.
Okay, just give me a second.